You're watching Silver News Daily. Subscribe for more.
Everyone knows that the emperor has no clothes. Everyone knows that those bonds will never pay back the value of the face. In other words, $1,000 paid 30 years from now is not going to have the purchasing power of $1,000 today. And even at a 5% yield, that's not going to make up for the compound inflation rate over 30 years. So everyone's pretending as if these things have value, when in reality, they only have value if you pretend that they have value, because the confidence and trust is there, but it's breaking.
The financial system isn't just shaking, it's splintering, and the blast radius is growing by the day. Trillions of dollars in sovereign debt are becoming radioactive, trust in fiat currencies is disintegrating, and behind the curtain, something extraordinary is unfolding. Silver, long manipulated, long suppressed, is suddenly exploding into the spotlight. This isn't just another price bounce. This is the start of something historic. In the last 72 hours, silver has rocketed past $35, notching its biggest daily gain since October. But that's just the beginning. Analysts are whispering of a breakout to $50, then $100, and some, like David Morgan, are going even further, projecting a surge that could eclipse $1,000 per ounce. That might sound extreme, until you understand what's igniting this firestorm. It's not just market volatility, it's not just technicals, it's systemic failure. The U.S. bond market, the backbone of global finance, is unraveling. Confidence in paper money is collapsing. And now, one U.S. state has just detonated a monetary bombshell that could change everything. Florida has made gold and silver legal tender. Yes, legal money. This isn't symbolic. This is a declaration of war on fiat currency. And the shockwaves are just beginning. But what does this mean for you? Is $1,000 silver really possible? And if so, what happens next as the entire currency system begins to implode? Stay with me, because what's coming isn't just a price move. It's a revolution. Oh, come on.
Well, my take, Elijah, and thank you for asking, is really kind of bittersweet. Here's why. It's wonderful that it was signed into law, and I put the announcement from Governor DeSantis into my feed at Twitter or X, and all that is great. However, I also posted my Twitter yesterday a little more details about this bill, and some of them are, well, I'll just leave it to the audience to make up their own mind. But the language was inserted in the bill in the last two iterations, and I think this is done back and forth in the legislature, and it prohibits legal tender coins that display any name, symbol, or marking that could be suggested as an issuance by government. What this means is that while the intent was to prevent deceptive government branding, in other words, someone that takes a silver round and puts, some fictitious country in there, or maybe even a, product of Zimbabwe or something, prevented. The idea was, we were told, was to prevent that from happening. But what it really means is that any government-issued silver coin, so think American Silver Eagle, Canadian Maple Leaf, Mexican Libertad, the Euro minted coin, South African silver or gold, Krugerrand, it prevents them from being used, which is the most available, most recognized, most trusted silver and gold coins out there. So the sound money movement fought to have that amended or removed from the legislation, but those efforts were unsuccessful. And so now Texas is thinking of adopting Florida's legislation almost verbatim, which would include the same language, which in my strong opinion should have been eliminated. So thank you for giving me a platform. I wanted to make certain that people in the sound money movement are pro gold, pro silver, pro honest money, libertarian leanings, revising the monetary system. I mean, anything I can name, are aware of this. We want sound money to work, but for it to work, it really must be broad-based. And again, I'm not sure the legislature really understood what they were doing. Perhaps they did. But, and it could be, I think in next year, I think the cycle of legislation, and I'm correct about Florida, I'm not sure that I am, but I believe that a year from now they might be able to amend it and be more specific. Any well-recognized government coins, such as the Silver Liberty, the Canadian Maple, just name them off, will be recognized. Any counterfeit silver round or gold round with, whatever would be eliminated. I think could just change it with just a couple of sentences to be specific that any government minted coins should be used, because this really kind of damps it down from the intent as far as I'm concerned.
The warning signs have been flashing red in the bond market for months, but now the dam is cracking, and fast. The U.S. Treasury market, once the world's most stable source of yield and liquidity, and is spiraling into dysfunction. Yields are soaring, not because of growth or inflation, but because no one wants to touch sovereign debt anymore. Foreign central banks are dumping treasuries. Liquidity is vanishing. And the buyers of last resort? They're stepping back, watching the system they built implode under its own weight. This isn't just a market correction. It's the breakdown of trust in the very instruments that underwrite the global financial system. And when bonds go, everything goes. Pension funds, insurance giants, corporate treasuries, all depend on the safe, predictable behavior of sovereign debt. But when confidence evaporates and volatility surges, they're forced to sell. That selling drives yields higher, which triggers more selling. It's a doom loop, and we're already inside it. As the bond market collapses, so too does the credibility of the currencies tied to them. The dollar, the euro, the yen, once pillars of global finance, are now tethered to liabilities no one wants. What we're witnessing isn't just a financial hiccup, it's a foundational rupture. And silver, it's responding. Historically, when bonds falter, capital floods into hard assets. But this time, it's happening faster. The bond market's collapse isn't just a warning. It's the catalyst for the next leg of silver's explosive rise.
The hierarchy of the financial system, there's a lot of ways to buy in the Japanese market for very low interest rates, swap those bonds, the Japanese bonds, into, say, U.S. bonds that are higher yield, and just play the arbitrage. Buy something for 1% yield, take that and rebuy something with the 5% yield and do nothing. And that's just a nice spread that you get for very low risk. And of course, you mitigate the risk by going into the derivatives market and buying some put options on the bond that you're afraid the spread may come closer. And of course, that's more financial transactions, but it's worth the cost because you're only sacrificing that 4% spread. You're guaranteeing, let's say, a 3.8% spread. And then you do it on leverage. So instead of getting really 3.8%, if you do it at 10% leverage, you're getting 38% leverage, 38%. Well, that's not too bad a deal, right? And this is the kind of games that have been played in the financial system for a very long time. And it cannot sustain itself indefinitely. And the cracks that I'm talking about are in the U.S. market I just described and the Japanese market, really the whole bond market. But primarily, I think it's the yen carry trade coupled with the reality of the U.S. Treasury markets that most dealers that are selling at the more recent auctions, there aren't the buyers there used to be. But there's the Federal Reserve, the buyer of last resort. But that really boils down to a snake eating its own tail. And this is basically where we're at. And I hopefully did it in language that is, everyone understands. It's not really that complex. The elites love to make it complicated, and you don't know what you're doing. And listen to me, you need a broker, and it's hogwash. It's not that complicated, but it's certainly designed with the wording and yield and the inverse, situation where interest rates go up, bond prices go down. People don't understand why and what the discount is, how much, as I explained. So I really appreciate this interview because it's really important that people understand that we're probably closer to a currency crisis that I've talked about for so long than most people may realize. I think, people that follow Eliza Johnson know, but how many people follow us versus CNBC or MSNBC or, Fox Business or whatever, or even, can't remember his name, the guy that's always wrong. Wow.
As the bond market craters, the contagion is spreading. And the next victim is the global currency system. Fiat money, already fragile after decades of manipulation and debt expansion, is now visibly unraveling under the weight of sovereign defaults, central bank missteps, and collapsing public confidence. The dollar is still the reserve currency for now, but cracks are widening. Foreign governments are accelerating de-dollarization. Bilateral trade in alternative currencies is surging, and gold is being hoarded by central banks at historic levels. But beneath all of this, silver is quietly becoming the most explosive play of all. This isn't just about inflation or interest rates anymore. This is about faith, or more accurately, the collapse of it. Trust is the only thing propping up fiat currencies. And as that trust deteriorates, we're witnessing the early stages of a mass exodus into tangible assets. Silver, with its dual role as money and industrial metal, is being reevaluated by investors worldwide. Not as a hedge, but as a replacement. When currencies collapse, capital doesn't just disappear, it relocates. And right now, it's flowing into hard assets with increasing urgency. The rapid moves in silver's price, up 5.4% in a single session, aren't technical flukes. They're symptoms of a deeper flight from risk, from paper promises to physical value. And as silver breaks multi-decade resistance levels, the message is clear. The world is losing faith in fiat. And when faith dies, silver thrives.
Nothing more powerful than an idea whose time has come. I forget who I'm quoting. And so we planted the seed. So that's the most important part. Absolutely. You're not going to get a tree to grow if you don't plant the seed. Seeds are being planted. More of them are being planted. And now it's a question of implementation. But, especially if the pressure gets more and more powerful, on the people, what can I do? How can I protect myself? And they realize this. People very inventive, very creative, and they'll come up with ways to make it much more easy to work. And, just because the law says it can't be a government coin, I don't know if people are even going to see that part of it. I'm just doing it because, it was pointed out to me by the group, the Sound Money Movement. And one of the keys there pointed out to me. I would have not known that, to be totally honest. But since I did learn it, I thought it was my duty to post it on X. But you know what? Someone that doesn't read that might just be doing a transaction in Florida right now for, 4 Krugerrands for a down payment on a car. And they both are believing 100% that they're doing the right thing because of the legislation. And unless somebody comes up and checks what kind of coins were slipped between them, it wouldn't make any difference. So, I'm a practical guy, and that's the practicality of it, So, there's a lot to be said, but I just wanted to point out the letter of the law rather than the spirit of the law, because I think there's a bit of a mismatch there.
The return to sound money isn't a fringe idea anymore. It's a global awakening. For decades, gold and silver were dismissed as relics, nostalgic holdouts from a bygone era. But now, as fiat currencies buckle and trust vanishes, those relics are starting to look like lifeboats. And it's not just retail investors piling in. Billionaires, macro analysts, and entire nations are shifting gears. Even Robert Kiyosaki, famed for calling out fiat as fake money, is now doubling down on silver, predicting a threefold surge as the biggest crash in financial history looms just ahead. This isn't just fear, it's strategy. Central banks are quietly amassing gold reserves at the fastest pace in over 50 years. Governments are flirting with digital currencies. But under the surface, they're hoarding the real thing. Because when currencies fail, only hard money remains standing. And silver? It's no longer just riding gold's coattails. It's carving out its own role as both monetary refuge and industrial necessity. This psychological shift, this rediscovery of honest money, is accelerating. The narrative has flipped. Precious metals are no longer quaint hedges. They're becoming central to national and individual financial survival. And just as momentum builds globally, the United States has crossed a line few thought possible. One state has taken matters into its own hands, rejecting fiat altogether in favor of constitutional money. That state is Florida. And what they've just done could change everything.
You're just getting better and better and better. I'll just say that out loud. That's the right question. When I was there, when the governor of Utah signed to say something very similar into law, and I made a big, I voiced my opinion strongly behind closed doors and said, this is great, but it's largely symbolic, using your word, because it's not practical. The only way to make it practical is to have perhaps a state depository where everything's inventoried and audited on a daily basis or a weekly basis. and you issued, let's say, a debit card, not a credit card, a debit card. It's got collateral. It's got gold and silver behind it. You use something very simple like the closing spot price of silver and gold at the COMEX every day. So if you bought on a Tuesday, the closing price on that Tuesday would be the price, and you would convert it automatically. So, and we have stuff like that, but they're very few of them available. And that's the only way to really get it into circulation. Now, since that time till now, the Utah people have come up with something that works pretty well, but it is largely symbolic, which is a step in the door. Let's face it, it's better than not having it. As far as practicality is concerned, it really isn't that practical. And another thing, which I'll voice, and that is that really the American people are still free to contract, which means, if you're a home builder and I come, and you bid on framing my new house, and I ask you, what, would you be willing to take, 256 ounces of silver to do the framing instead of, whatever the equivalent is in fiat? And you say yes. We've got a deal. I don't have to have any lawmaker give me permission to do that. And so those things happen too. But again, it's, very, very rare that they do take place. So I think Texas is probably one of the leaders here, where they're, using the state depository, to my understanding. But it's
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active. Florida's move wasn't symbolic, it was seismic. By officially recognizing gold and silver as legal tender, the state has ignited a monetary rebellion right inside the world's largest fiat empire. For decades, legal tender laws have forced Americans to transact in dollars, no matter how inflated or devalued they became. But now, Florida is rejecting that mandate, opening the door to real constitutional money. And in doing so, it has fired the first legislative shot in what could become a nationwide revolution. This changes the game entirely. The law allows individuals and businesses to settle debts in physical silver and gold. It's a reassertion of economic sovereignty, a direct challenge to the Federal Reserve's monopoly on currency issuance. And it's not just ideological, it's practical. With inflation still raging and the dollar's purchasing power in free fall, Florida is giving its citizens a way to opt out. The ripple effects are already being felt. Other states are watching closely, weighing similar moves. If this spreads, and it will, it undermines the very foundation of the fiat system, forced currency usage. And here's where it gets explosive for silver. If even a handful of states adopt precious metals as money, demand will skyrocket. We're not talking about investment demand, we're talking about monetary demand, the rarest and most powerful kind. When silver becomes not just an asset, but a medium of exchange, the price floor disappears. But here's the twist. Because while Florida's move looks like salvation on the surface, the execution may be far messier than anyone expects. And that's where the chaos truly begins.
It's got to be simple, and it's got to be convenient. I mean, I take a bunch of Silver Eagles into, Walmart in Utah, and I want to buy something, it's just going to stir up a mess. People aren't going to know what it's worth, what's the price, so it's changing, all that. So there are some practical things that have not really been thought through that well. But again, to have it done at law, and more states are following suit on it. Some states are looking at it as, why should we even tax money? Because gold and silver are money. So there are all these questions. The sound money movement, and I'm part of it. We're trying to work through these things. And, one is education, which you've done a great deal with, as you know. And the other one is, well, what's the simplest, easiest, most common sense method to really get traction in this? Because a lot of people want to spend their silver and gold. we'll digress for a moment longer. You'll get back to you, Elijah. But James Turk, years ago, after gold mining was really up and running, and I said, the biggest question I get is, a lot of my people, a lot of people that subscribe to the Morning Report, or people that meet me casually, or ask me questions. How do I sell it? I believe what you're saying, David, and he just smiled at me, said, sell it. They're going to spend it. And at that time in gold money, you could spend it. And that got nixed. So maybe made an over large answer there, but it isn't, it does need to be practical. The way you're going to make silver and gold more important is its use as money. And if it's just okay to use it, as you say, symbolically, it hasn't really changed very much.
At first glance, Florida's legal tender law seems like a clean break from fiat enslavement. But dig deeper, and the cracks start to show. The legislation boldly declares gold and silver as money, yet fails to define the critical mechanics of how they'll function in day-to-day commerce. There's no unified pricing mechanism, no enforcement standard for valuation, and no infrastructure for transactional clarity. If silver is legal tender, how is its value determined at the point of sale? Spot price? Premiums? Intrinsic weight? Already, critics are warning that these ambiguities could spark widespread confusion, and worse, exploitation. Imagine walking into a store with a silver coin, only to find each merchant values it differently. One uses COMEX spot, another demands a 20% premium, while a third refuses it altogether out of fear of volatility. Without a centralized clearing system or digital framework to normalize transactions, the use of silver as currency becomes a logistical nightmare. And then there's the question of taxation. Is it a purchase, an exchange, a capital gain? The IRS hasn't weighed in, and until it does, users face the risk of audits, penalties, or worse. This isn't just theoretical. Historical attempts to reintroduce metals into circulation, like Utah's similar law, have struggled for the same reasons. Without clarity, sound money becomes unstable money, and that paradox threatens to derail the very revolution it aims to spark. But ironically, this chaos could be silver's greatest catalyst, because as the system strains to adapt, demand for physical silver, not as an idea but as a usable asset, will surge. And while the public wrestles with policy gaps, something else is quietly happening. Silver is detonating on the charts.
That's a real tough one. I would say if you asked me that 2 or 3 years ago, I would have said there's a higher probability than I think there is now. Now, there's others in my peer group that think it's inevitable that unless we go back to some kind of gold tie or gold and silver tie, that the new system won't gain traction. I disagree with them, but it's opinion and opinion. So no one's really better than the other. You can make up your own mind and weigh the facts. But, the one thing that bankers don't want to lose, and that's control. And so as long as they have control of the system and they can dictate what the system is, they remain in control. So if we go to a private-public partnership where the banks aren't involved directly, but indirectly, like say JP Morgan brokerage house issues a digital-backed dollar, but there's no more currency in circulation. In other words, a cashless society where it's digital only, but it's not a bank, it's not the government. The U.S. government didn't issue it. Private corp did. And there's other corps. So Amazon gets into the act, and pick another one, Apple or something. And they all trade, against each other or whatever. But I don't see it now going a step further. And this part does make a lot of sense to me. Jim Sinclair and Bill Holter have said in the past, and I believe I have this fairly accurate, that the first round of the reset will be on a non-backed digital currency, and it will not be adopted fully enough. There'll be too much pushback. Well, they will regroup and issue one that will have a purported tie to gold or maybe a commodity basket. And I certainly didn't rule that out. I think the thinking on that is sound or correct. But I would question step one, whether or not it will be adopted, because especially if times start to get harder and harder, the universal basic income is just around the corner and people are losing their jobs due to AI replacement, and robots are taking over for some manual labor and all that type of thing that we see in the very near future. And people get desperate. They do desperate things. And the way out is to sign up for the new system and maybe get $1,000 bonus if you sign up within the next 30 days or that type of thing. It doesn't have to be 100%. In fact, it may never be 100%. I mean, there's many people worldwide. I forget the number. Elijah, I think it's 1.4 billion people on the planet are unbanked. They still transact with cash or have some app that works similarly, but they don't have a bank account. So, I mean, there are people that exist without a bank, and that will probably always be the case.
While lawmakers scramble to retrofit the monetary system, silver has already made its move, exploding past key resistance levels and flashing the kind of technical signals that scream breakout. In just one trading session, silver surged over 5%, breaking cleanly above 34 to 55, its biggest daily gain since October. That wasn't just a bounce. It was a statement. The white metal blasted through multiple ceiling levels like they weren't even there. And suddenly, the charts are wide open. Traders are now watching $35.36, the October 2012 high, like hawks. If silver breaks above that, the next major target is $37.46. And once that level falls, it's game on for $50 and beyond. What's fueling this move isn't just emotion. The momentum indicators are flashing green. RSI is climbing but not yet overbought. MACD is screaming bullish, and volume is surging. This is the kind of setup that makes even the most skeptical traders take notice. But here's what makes it different this time. Unlike past rallies driven purely by investor demand, this breakout is happening in the middle of a perfect storm. Monetary panic, sovereign instability, currency rejection, and now, physical silver shortages. This isn't just a price move. It's the start of a structural revaluation. Silver is no longer acting like a commodity. It's moving like a currency under siege, and every chart confirms it. And while the technicals are explosive, what's brewing behind the scenes is even more volatile. Because the real pressure cooker isn't just in the charts. It's in the vaults. Banks, funds, and traders who've been shorting silver for years are now staring down a reckoning. The squeeze is coming.
Yeah, that's a hard one. I don't know. It's just something popped in my head. It's probably corny, but I'll say it anyway. I know I can say anything. I mean, maybe there's a, Silver Thursday. I mean, not every Thursday you pay with something in silver, but maybe, once a month or once every 6 months, or maybe once a year even, just as long as, it's a way to educate people, or maybe businesses. I would put it on the people, like if you run a coffee shop that's not a chain, it's independent, you own it, you could discount, and that would be probably one of the best ways I could think of is that, a latte is what's prices these days. I don't do it very often, four fiat, 5 fiat. So you can do it for a dime right now is worth about $3. So fiat. So one silver dime is worth about $3 fiat. Well, silver hasn't moved. Yeah, it has. It hasn't moved as much as gold. Anyway, so you put up and your sign is $4 silver is 1 dime. And that's right on your marquee. It shows you what the prices are. I think if a few independent stores did that, I think that would be the best way, because there you're looking at it and you're thinking, well, is that a good deal? A dime sounds pretty cheap. And then someone goes and, calls the coin shop or gets on the internet. How much is a silver dime worth? So, and that was done in the past, by the way. It's still done. It's very, very rare. But you go into some of the rural places, and it's rare. I mean, I'm not saying you can find it, but every now and then you'll see. It used to be in gasoline when there were more independents, when the first energy crisis happened. That was the early 70s. But there's still places that will accept it. In Wallace, Idaho, where so much silver came out in the early days, they, for quite some time, and they probably still do it in some stores, they'll do that. You can buy almost anything in the store for silver, and usually it's at a better price than the fiat equivalent.
For years, the silver market has been a battlefield of suppression and manipulation. Major banks and institutional players have kept prices artificially low through relentless short selling, turning silver into one of the most distorted assets in the entire financial system. But now, that game is unraveling. As silver rips through resistance, those short positions are becoming time bombs. Each uptick in price tightening the noose around institutions still clinging to paper contracts. And when the margin calls start hitting, the exits are going to get very crowded, very fast. This is the anatomy of a short squeeze. Physical silver is drying up. Premiums on coins and bars are surging. Retail investors can't find supply. Wholesalers are reporting delays and back orders. And yet the paper markets still pretend everything's fine. Until suddenly, they can't. When traders are forced to cover their short positions into a rising market with shrinking physical availability, the result is not just a rally, it's a detonation. We've seen glimpses of this before, like in 2020, when the Wall Street silver movement caused panic buying and temporary shortages. But this time, the conditions are far more explosive. Add in central banks hoarding gold, fiat panic spreading, legal tender revolutions igniting across U.S. states, and a global populace waking up to the lie of paper wealth, and you have the makings of a historic melt-up. The question isn't whether the squeeze will happen. It's how violent it will be. And if silver shoots past $50, the psychological floodgates open. Triple digits won't just be possible, they'll be inevitable. But the moment of truth isn't years away. It's unfolding now, which brings us to the final, most critical piece of the puzzle. Timing. Why is this happening now? Why is silver ready to do what gold already has and more? That's where everything comes together.
Yeah, the thing that, I've said it for years and I probably don't say it often enough, but I think Bill Holter probably says it much more often than me. But, he talks about the credit, everything's based on credit. Really, what he's saying is he's accurate, is that everything revolves around the bond market. The bond market is what I've called the keys to the kingdom. In the monetary world, without a debt-based monetary system, everything is based on trust or confidence. And the confidence is that we've been brainwashed, we, the people of not America, of the world, that the most sacrosanct thing in the monetary world that you can ever have is a government-issued promise to pay, which for a short term is called a T-bill, for a midterm is called a note, and for a long term is called a bond. And they promise to pay you the face value of the bond, which is $1,000, and an interest rate that is proportionate to that bond issuance. So the bond is issued during the ZIRP time, zero interest rate policy. The interest rate is very, very low, but interest rates have been pushed higher. So if you buy a bond today, a long bond is roughly 5%. So let's say you have a bond that was during the zero interest rate period. The only way you can sell that bond is to discount that bond's price from 1,000 to whatever the equivalent is to give that, let's say 0.5% yield, an equivalent yield of 5%, which might be like a 40% discount. So if you had to sell that bond, you'd sell it for $600. Why? Because the buyer of that bond could buy a new bond for 5% yield. So he'll buy your bond at 5% yield because you discounted it that much. Am I making sense so far? Because this is exactly how it works. And so someone says, well, why would someone not just buy a new bond? Well, you might buy a bond that's discounted to the same yield or maybe slightly more because it doesn't have the duration. So instead of having to wait to get the $1,000 for 30 years, we might only have to wait 20 years. So actually there's an incentive to do that. Now, what's the other side of the coin? The other side is I need the money. This is the only asset I have, and I've got to sell it because I got to raise cash. So there's an impetus there. So take that from a micro picture to a macro picture where, let's say, a brokerage house gets a big margin call and they've got to sell what's the most liquid. And of course, that's usually gold. But after that, it's something in the treasury market, the U.S. treasury market. It's the biggest in the world and the most trusted. But everyone knows that the emperor has no clothes. Everyone knows that those bonds will never pay back the value of the face. In other words, $1,000 paid 30 years from now is not going to have the purchasing power of $1,000 today. And even at a 5% yield, that's not going to make up for the compound inflation rate over 30 years. So everyone's pretending as if these things have value, when in reality, they only have value if you pretend that they have value, because the confidence and trust is there, but it's breaking down. So that's my main point about what I wrote. And then if you go into the games that are played,
all the signs are converging, all the pressure points are aligned, and the timeline is no longer theoretical. Silver's breakout isn't coming, it's here. The bond market collapse has triggered a cascading crisis of trust. Currencies are faltering, the dollar is losing its grip, and states like Florida are openly rejecting fiat in favor of hard money. Meanwhile, silver is erupting through resistance, institutional shorts are trapped, and physical supply is evaporating. Every macro, monetary, and technical force is now pointing in one direction, up. This isn't just a rally, it's a monetary reset. Silver is stepping into its ancient role as true money, not because of nostalgia, but because the system built to replace it is failing in real time. As fiat regimes fracture, the world is being forced to remember what real value looks like. And silver, with its unique position as both a monetary and industrial asset, is poised to become the ultimate safe haven. A $1,000 silver price might sound outrageous today, but if the current trajectory continues, it may soon sound conservative. So the question isn't whether silver will explode, it's whether you'll be ready when it does. The signs are flashing, the fuse is burning, and history is about to be rewritten. If you found this discussion valuable, make sure to subscribe so you never miss the next phase of this unfolding story. And remember, this is not financial advice. Always speak to a licensed professional before making any investment decisions.